The results of the gross domestic product for the first quarter of 2020 will be announced at a media briefing to be held sometime this morning. Now, all indications are that the data will reflect the effects of a recession entrenched before the onset of the coronavirus pandemic. Key sectors such as manufacturing and trade have taken a beating due to a depressed economic activity, and this was in the early part of the year. And this downturn trajectory is expected to continue on the back of the alarming unemployment numbers that were released earlier this month at about 31% or 30% or so. From my memory, in the last quarter of 2019, the economy contracted by 1.4%, resulting in South Africa's third recession in the democratic era. Predictions by economists are that the numbers will continue downward. Let's get a sense of how exactly the situation is likely to unfold. For more, we're joined by Dr. Nthabiseng Moleko, who's a development economist at Stellenbosch Business School. Thanks very much for your time, Doc, and welcome to the AM Report. I'm very tempted to start on a good note first. I mean, are there any reasons for us to at least be optimistic that there will be some silver lining from the GDP figures later today?
Thanks so much for having me, and good morning. I think that I have a different view slightly. South Africa's economic booms and busts do surprise us. No one expects the recession or the contraction that we recently had of a negative 1.4% contraction in the economy. It is possible, based on two factors, and I'll go out of the box and say that there's a recently the Purchasing Managers Index, which comes out regularly. It had an interesting turn. Despite the decline by 1.9 points to 45.2 index points, which are pretty low levels, but if you look at the performance of some of the major subcomponents, it has been a mixed bag of results, and there have been two indices that were recovering somewhat from multi-year levels. So it's possible that these three indices, this one indice may show that business activity may have ticked up just for the quarter. You must remember that this is not yet feeling the effect of the COVID-19 lockdown. It's quarter one of the year. So it is coming off a low base because, remember, we had the contraction in the last quarter of last year. So these indices do remain at relatively weak levels. It may suggest that there's a weak demand that weighs on possible growth. But this is not necessarily a change in the structure of the economy. So we have to look at the overarching drivers. I think one of the other things I'd say is that the business activity index regained some of the losses as well in the final 2 months of last year, but there may be a slight increase that could be expected, although low. I want to point that out. So we may still have weak manufacturing output that is sustained at the start of the year, but soft output growth as well in that first quarter. So it is possible that because of some of these positive indicators, we may see a slight uptick only for a quarter, because once we feel the COVID-19 effects, we will all know that the contracted 7.2 that has been estimated by the Minister of Finance is likely to hit us, and we'll know the real effect of COVID in the next quarter.
Yeah, and it almost feels that that's what people are more anxious to hear about. Given that, where does it place the figures that we're about to hear later today? I mean, will they hold any level of significance?
I think they do. I think what is important for us to note is that South Africa is in a low growth, low employment trap. We must accept that the economy is not, hasn't been restructured. Our growth drivers have not really been able to move employment. We've seen the recent statistics, SA outcomes, showing us that this low growth, low employment trap is something that we have been experiencing repeatedly so for the last 2 decades. And I think what is important is that the contraction that we expect will further contract our employment numbers, reduce our tax revenue by the 300 billion that has been estimated by the National Treasury through the Ministry of Finance. There's no doubt that we are in unprecedented times with regards to the economic impact that will be felt, and everyone is estimating right now the severity of this contraction, but it is without a doubt likely that given the quarter two numbers that will be released, obviously, in a quarter from now, the economic impact will be severe. But I think it points to the need for us to change the structure of the economy. So let's look at our manufacturing value add. Let's look at how we can increase our productive capabilities going forward, because I think we look a lot at what is happening right now. I think what the country needs to look at is economic policies, the economic drivers that can begin to boost our aggregate demand, our output, and also kickstart the reigniting of the economy. And that's what we need to look at. So I think that, yes, mining will probably be down in terms of a subsector. Electricity is never up because of what we're experiencing with the Eskom. I think manufacturing as well, but we could see likely some movement up, probably from government services, possibly trade, which may surprise us, and personal services. So these are some of the subsectors that you could look to see whether some of these industries which have regressed may also increase in this quarter. But it is in the next quarter, the down slump that is predicted will definitely come. But it is possible because of the boom and bust of the cycle of South Africa's economy that we come out in this quarter of the technical recession, but we will see the real hardship that we will incur in the next quarter.
Right. And Doc, in these conversations, typically one is tempted to hammer home the figures, worst numbers since 2013, et cetera, et cetera. But I'm interested in the bigger picture, So let's take a few steps back. For many people who can't connect the dots about why it matters that our economy is on a downward trajectory when the world economy is on a downward trajectory, how would we explain why this is important, why we should be concerned, and why it's important to have urgent interventions?
Okay, so the economic health of the country and the economic performance of the country affect various indices which affect our day-to-day livelihood. So, for instance, it's important that you have growing subsectors of the economy because they employ the large bulk of our individuals in the South African economy. So the minute you have a boom or a bust, right, it speaks to the ability of those subsectors to survive. So we're talking now the health and the economy of the SMME sector, the ability of our labor force to be actually employed within the South African economy. We're talking just the economic health and the livelihood of South Africans affected daily. So we're talking subsectors like construction, which employ the large basis of our unskilled labor force. We're looking at our trade industry. I think one of the factors that you've mentioned is the global slump, and I think I started out with it. The economic activities in this quarter are likely to have started ticking downwards at a global level because of the retraction and because of the announcements of COVID-19 globally at this time. So you will remember that South Africa only began to feel the effect of COVID-19 post the lockdown at the end of March. So that is why there's a lagged effect probably, and that effect will be felt only in the next quarter. So these indicators that look at household level of consumption, the drivers of the different subsectors, and also I think the ability of our productive sectors to just keep going and keep economic activity alive, point to the health of the economy. So you want these subsectors going, you want these subsectors active, and you also want to note that South Africa's economy is very dependent on the global upticks and downturns. So we know that we have a large commodity sector, and the demand for a lot of our minerals is driven by global demand. So if there's a slump in the global demand, it drives down prices, but also it drives down productivity in our mining sector. And so these have value chain and downstream activities that influence many of our subsectors. So it's very important to understand that there's not all the employment and all the economic activity, variables such as employment, variables such as inflation, such as the general SMME activity, which also supply a lot of big subsectors in terms of produce and goods. Agriculture, for one, is also another subsector we should look at and see. There might have been an upward tick in the first quarter as well, which is around the business activity that I was speaking about earlier, and the improvement of this index. But I think that structurally, we probably have not done enough to change the downward trajectory of the South African growth problem, which is driven by the inability for us to restructure our growth drivers. And I think that's what we must focus on in this.
Yeah. And, you know, there have been calls to do exactly that for years now, I think. But you also mentioned, you know, global upticks and downturns, and that does very interesting things to our current account, right, our imports and exports. And I find that particularly interesting myself because it also has a bearing depending on how the currency is performing, and there are winners and losers depending on how you see it. Given that, are we able to get a sense of, you know, the impact of the current account on the overall GDP figures?
So the driver of that is really, as you say, the ability for us to produce more than we actually, and sell outside of our country more than we actually bring in. So you will remember that have we had a surplus in the South African trade numbers for the last, I think there have been some changes, but I think on the whole, South Africa, generally speaking, is on the whole, there may be a change in the last quarter, but if you look at us systemically from an aggregate perspective, we're net importers. So we see that we're not able to produce sufficiently in most of our productive sectors to drive up. Our current account. So we see that in terms of our earnings, there are always shortfalls. However, this can be changed. We do have sufficient foreign currency reserves. We do have support with what we call the portfolio investment inflows. South Africa's low savings and low levels of investment are insufficient to sustain our economy. So we rely on these what we call volatile portfolio investment inflows. And these spike up and down, and they're not very stable. So we have to look at increasing and boosting our internal savings as a country. So I think that we need to look at structural constraints and really try to drive up household income levels, which would boost savings and boost our ability to have our own national savings drive boosted and equated to the levels that are required for sustained investment levels as well.
Absolutely. Well, Doc, when all is said and done, we're all going to have to wait and see how those figures turn out. Thank you very much for your time. Certainly appreciate it. That is Dr. Nthabiseng Moleko, who's a development economist with the Stellenbosch Business School. Appreciate your insights indeed. So, of course, we'll bring you those figures as soon as they're made available right here on Newzroom Afrika, channel 405.